Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 26th of October, Wednesday. So yesterday we got Microsoft earnings better than expected. Microsoft beat both EPS and revenue, but it dropped 6% due to Microsoft Cloud not rising, not growing as investors expected. Google have very bad earnings, missing both top and bottom lines, and also due to ad revenue and even in the red. They were expecting 3% in the positive, but ad revenue for YouTube was minus 2%. So Nasdaq took a hit yesterday. We gapped down, and the good thing is that we are holding this 11,400, this green resistance that we got an overnight yesterday. So we gave back all the profits during yesterday, first part of the day, and due to earnings, Nasdaq was pulling back. So we can identify a gap in here. This gap that is appearing in the overnight, and we fill that gap, and right now we are more or less holding in the middle of that gap, in the middle of nowhere, forming a consolidation during this 5 minute. So what happened? Is there any news that we have to be aware? Not exactly. The news, the economic data that was released at 7 a.m. was regarding mortgages. The 30-year is still increasing from 695 to 716. So it's not directly impacting the markets. We have to wait for 8:30 to continue getting building and new home sales in this case. Also home sales sector. So this is quite important. 8:30 building and retail inventories, and at 10 new home sales. So be careful before the market open, and also 30 minutes after market open, new home sales. Those are can have an impact on the markets. So let's review the yields, because right now we are in the 10-year. As you can see, we are pulling back several days straight in the red. Today, minus 124 for the 10-year, and the 2-year is also kind of pulling back. Right now, trading sideways, minus 1.12%. So both yields are pulling back or going sideways, and that's good for the market. If we take a look to the daily, we are approaching this 440 in the 2-year. I have an alarm there, and we have approaching the 4%, the flat 4% for the 10-year. And if the trend continues, the market will go higher. Decreasing yields pulling back is good for the market, because that means that interest rate hike bonus market are not pricing in as high as expected interest rate hikes. But for sure, if we review the Fed Watch tool, we are still pricing in 98% of probability for a 75 basis points in the next week interest rate hike. So yields still pulling back. We might continue higher if the trend continues. And another key very interesting market is the dollar. Dollar is breaking down this ascending support very clearly. If we change to the 2-hour, we can see that it's in the middle of this. Yesterday we had a big area to area pullback from demand to demand. We held a little bit, and we are now again going to the next demand zone, previous supply zone. So we are now seeing demand in this area. It is quite interesting to see. If dollar remains weak in this 109, 109, 110, I think that combined with the yields, we can see a strong market again pushing up. The other thing that I would like to see is Utilities continue going higher. We were consolidating again. Market structure, we are now doing a nice higher low. And we can have a push to the 200 for sure in the XLU utilities, and also consumer discretionary versus staples. XLY is super important right now in the red, so be careful because this can lead to uncertainty and risk off. That means a pullback or a drop in the market. But right now, we'll have to watch carefully what Nasdaq and ES, the leading one, is pushing very hard, breaking this pivot on the daily and actually starting to go chasing the 3,900 level, and that could be insane. I think that's all. At least the key energy is, well, crude oil is not having a huge impact. It's now more or less breaking up. Natural gas is in the red, but I think the focus is the dollar and yields, and both are saying that we are still quite bullish. What's left? So I think today, after market closes, one of the most important things is Meta. Meta will report earnings. Yesterday it got hit due to Google missing ad revenue. Remember, Google, YouTube, and Meta, Facebook, they are dependent on ad revenue. That's their main business. And I don't think if Google missed, I don't think Meta will beat expectations. So expect the worst. I think Meta will miss, and that could impact obviously Meta stock and also the Nasdaq. That's for today after market close. Remember, be careful trading today, follow your plan, and watch out for Meta earnings after market close if you are swinging in a position. Until then, be patient, discipline and risk management as usual. Thank you for your time. If you have any questions, please comment down below and I will try to respond to all of you. If you found this video useful, please click the like button and subscribe to the channel. Remember, I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time and see you in a couple of hours with a market update. Remember, stay patient, discipline, and risk management are key for our success. Stay safe, everyone.